Tonight, we are digging deeper into concerns about the bank industry after Silicon Valley Bank closed on Friday, followed by yesterday's shutdown of Signature Bank.
President Biden is assuring the public that the American banking system is safe.
WFXR's Amanda Lee talked with an economics expert about bank failures in the past and what they tell us that we can expect out of these. Amanda.
Yeah, good evening, Drew. Economics professor at Virginia Tech, Jadrian Wooten, says bank failures like this one are not new. He says they've been happening since the Great Depression to the Great Recession of 2008. Now, people can get nervous when it comes to their money. He says the worst thing depositors can do right now is panic.
This is really something that it's happened for a very long time. So I think that's probably the most important thing that people need to realize, that this isn't necessarily something that is a 2023 phenomenon.
Professor of economics at Virginia Tech, Dr. Jadrian Wooten, says bank failures have been a problem since banks started.
And that's where the FDIC was really started coming out of the Great Depression. There was so much uncertainty around really a collection of things.
The shocker came on Friday when the 16th largest bank in the U.S., Silicon Valley, failed. Then there was more confusion as Signature Bank shut down on Sunday. They've been recorded as the second and third largest failures in U.S. history.
The banks that tend to shut down are usually smaller banks. They're community banks that have a really small amount of deposits, a really small amount of assets. Those are the ones that do shut down occasionally. But again, it's one or two banks per year out of the entire country.
Dr. Wooten says that history shows people only make things worse when they begin to panic and rush to take all their money out of financial institutions.
Like during the pandemic with the toilet paper shortage, people were convinced that they wouldn't get toilet paper, so they rush out and buy as much as they can. And then other people show up and there's no toilet paper.
He says larger banking systems have more opportunities to diversify their assets, meaning the likelihood of a collapse is slim. He says one of the bigger questions here is, how does this affect the stock market?
We'll likely see kind of a general kind of reversion back to what we were last week.
He says stock prices for big companies like Roku, who are heavily invested in Silicon Valley Bank, will be hit the hardest. And he says it's best to wait a little to get a better understanding of what's happening and what's going on instead of rushing to sell stocks immediately. For now, reporting live in the newsroom, Amanda Lee, WFXR News.
All right, Amanda, thank you. The president says the FDIC will use deposit insurance funds until they can find buyers for those banks. He says no taxpayer money will be used.